Chapter 7, Money Laundering and Transnational Financial Flows. You can see in this chart a list of financial crimes and the cost involved with these. So it looks like in 1 year we had money laundering and it cost $267 billion. So quite a bit of money from this kind of fraud. So let's see, what is money laundering? Well, money laundering is to take money that comes from one source, hide that source, and make the funds available in another setting so that funds can be used without incurring legal restrictions, penalties, or sometimes taxes. So you're taking money that is usually obtained illegally and you're trying to make it look like you can legally use it, in another setting. So let's talk about this some more. Now, steps of money laundering. Well, first of all, once you get the money, the cash, from whatever source, a lot of times illegal, then you would like to deposit that in a bank or financial institution. You want to get into the system. You want to be able to move the money around the world or around the country. So you get it deposited, and then you set up a set of complex transfers, and you want to disguise the original source. So you transfer it from one bank to another bank to another bank. It's called layering. And these banks can be around the world. And number 3, the money is integrated back into the legitimate money supply. So now it looks like you can use the money. You've hidden where it has come from, and so you're hoping that it now looks legitimate. With cyber cash these days, the internet, people can transfer large sums of money instantly around the world. And sometimes you can use it without a bank. Get into the cryptocurrencies. You can transfer those around, and no bank records are involved. Of course, a lot of people want to get the money into a bank. They want to be able to use the money, to pay for other items, to move it to other bank accounts, other people. They're trying to get it into the bank. So let's talk about banks a little bit. Correspondent banking takes place when one bank provides services to another bank to move funds, exchange currencies, and access investment services, and so forth. So you have a relationship. It can be like a bank in the U.S. has a correspondent bank over in Europe or Africa or another part of the world. A payable through account is one more step past that. And let's say you have a bank that's a correspondent bank in another country outside the U.S. That bank, through a payable through account, would allow their customer to write checks, but the money really comes out of the U.S. bank account. It comes through that correspondent bank, and it looks like the correspondent bank's check, but the funds could be in the U.S. Banks are obligated legally to try to stop money laundering, and they have various ways to try to identify that. They have software that monitors, deposits, transfers, withdrawals, all kinds of transactions. They have a currency transaction report that must be filed when cash of $10,000 or more is involved. And they have suspicious activity reports that are filed when, even though the amount being looked at, the exact transaction, maybe is not $10,000, it looks suspicious. There could be like one suspicious activity or a series of activities. So the last two, the CTRs and the SARs, those must be completed and filed with the federal government. Banks are supposed to do diligence when they deal with other banks, relationships with businesses, clients, and so forth. They need to monitor the transactions, and they need to make sure that they know who their customer is or who their, let's say, partner is in the correspondent bank. So it must coexist, and this must coexist, like it says at the bottom, with the client's need for privacy and the secrecy laws in many foreign jurisdictions. Those are being overridden more and more governments are able to obtain more information from those secret bank accounts than in past years. Shell banks are set up without a physical presence. There's no bank building. They're just, out there on the internet. They might have a banking license. They can accept deposits, transfer money, but they have probably very little staff, if any, and they do not have a physical presence. Let's take that and look at the offshore banks. Again, this is very similar. They're organized in a licensing jurisdiction, but the people in that jurisdiction cannot deal with that bank. So, again, they're just set up, they're internet banks. If they get connected to the real banking system, then it allows them to transfer money around just as easily, and they can be involved in money laundering. Where does all this cash come from? Well, online, or let's say cash-oriented businesses, we have currency exchanges, online auctions, casinos, bingo halls, laundromats. And these could be somewhat, legitimate businesses. They very well could be. But also cash comes from, the drug trade and things like that. Now, how would we as individuals and other businesses, guard against money laundering? You need to know your associations. What business are you dealing with? You're going to hire someone. Make sure you know who you're hiring. Company due diligence. Have to verify, company ownership and governance. Trust due diligence. Look at trust deeds, beneficiaries. So this is just saying that no matter if you're an individual or a business, whoever you're doing business with, you need to verify who they are or what they are, and are they legitimate. The accountant's role as gatekeeper. Well, in the external auditing area, we have SAS 54, and SAS 82 has been replaced by SAS 99. And it tells you what you look at if you find out illegal acts by clients. Now, just in general, an external CPA on an audit does not have to report an illegal act by a client to another party. What I would really recommend is if you find something going on illegally in the business, then contact your attorney to find out how to handle it. Don't just guess at this. Contact a good business attorney. Find out how to handle this. Now, if these acts are so blatant or so large, they impact the financial condition of a company you're auditing, then you have to state the financial statements are not presented fairly. Again, you cannot just go state or make public an illegal act. Contact your attorney to find out what to do. The Us Patriot Act of 2001, this was passed to help hopefully prevent money laundering, even though it still happens a lot around the world. It's part of the Financial Anti-Terrorism Act. And they look at payable through accounts. Be careful with those. And they look for other items, and they have certain requirements to be reported and so forth. It is a big act here. That it's a big part of the law in this area. Well, that was a quick overview of this chapter. Again, you need to read the chapter in detail to get a lot more information. So, good luck with your studies.